Hello everyone, welcome to the channel. Today we will see about set off and carry forward of losses under the Income Tax Act. So these provisions are dealt by section 70 to section 80 of the Income Tax Act. First, loss is created whenever the expenditure in relation to a head of income is more than the income in relation in the head. A loss arises. For example, if expenses in business are more than the sales of the business, then there will be overall loss. So this loss can be set off against the income arising during the year. So there are three rules for set off and carry forward of losses. First is intra-head set off. That is set off of losses within the same head. Example, set off of loss from one business against the income from another business. Second is inter-head set off. That is set off of loss of one head with income of another head. For example, set off of loss of business or profession with income from capital gains. And the third option is if even after all this set off the losses are still remaining, then we can carry forward the loss to the next year, future years. So let us see these provisions in detail. First, in case of intra-head set off, there are some rules and restrictions. The loss from one house property is allowed to be set off against income from another house property. Loss from one business is allowed to be set off from income from another business. And capital loss, in case of short-term capital loss, it is allowed to be set off against long-term capital gains and short-term capital gains. However, there are some restrictions in intra-head set off in case of speculation business loss and long-term capital loss and loss from owning and maintaining racehorses. These losses can be set off only against the same type of income even within the same head. That is, speculation can be set off only against speculation profit. Long-term capital loss can be set off only against long-term capital gains. And loss from owning and maintaining race horses can be set off only against income from the same activity. Now let us come to inter-head set-off. Under inter-head set-off, there are two exceptions. First is business loss is not allowed to be set off against salary income, and there is no inter-head set-off allowed against capital gain loss and speculation business loss and race horse loss. Further, house property loss can be set off against any other income during the year, and then it can be carried forward to the further years. However, there is a limit of inter-head set-off of 2 lakh rupees in case of house property loss. For example, if the income from salary is 2 lakhs and the income from house property, loss from house property is 3 lakhs, then only 2 lakhs of loss can be set off during the current year. The remaining 1 lakh of loss has to be carried forward. So if we need to see the summary, then loss from house property is governed by section 71B. It allows the loss remaining after set-off to be carried forward for 8 assessment years, and there is no restriction regarding the return filing in time. Second, business loss, that is non-speculative, is governed by section 72, allowed to be carried forward for 8 years, but there is a restriction that the return has to be filed before the due date. Otherwise, the carry forward of loss is not allowed. Further, the business loss so carry forward can be set off only against business income in the future years. Similarly, the rules are for speculation business loss, short-term capital loss, long-term capital loss, and loss from owning race horses. There are only two exceptions. Speculation business loss and loss from owning race horses are allowed to be carried forward only for 4 assessment years. But for them as well, the return has to be filed before the due date. Otherwise, carry forward is not allowed. However, there is one type of loss, that is unabsorbed depreciation, in which case There is no restriction regarding filing of returns. There is no restrictions regarding carry forward of number of years it is allowed to be carried forward, or no restrictions regarding the heads of income against which it is allowed to be set off. Now let us see some complications in business profession laws in detail. As discussed earlier, the carry forward is allowed for 8 assessment years and set off is allowed only against business income in the next future years. However, there is one important point, that is presumption under section 73. Whenever the company is dealing in shares and if the principal business of the company is not share dealing, then that business activity is considered deemed to be a speculative business activity, and in this case the company loss from such activity will be allowed to be set off only against speculative business profits. Unobserved depreciation. Like other losses, unobserved depreciation can be carried forward indefinitely. So there is no time limit for set off. When does unobserved depreciation loss arise? Unobserved depreciation loss means the depreciation allowable for the year exceeds the profits or gains of the business or profession. The remaining conditions we have discussed earlier, that is carry forward for unlimited period, set off same year and set off in future years also against any other head of income. Now let us see the key restrictions in brief in case of set off and carry forward losses. First is timely filing of return. Second, and the most important, is change in shareholding governed by section 79. It says that for closely held companies other than public companies, if there is a change in shareholding such that at least 51% of voting power is not held by the same shareholders at the end of the year of loss, carry forward of loss is not allowed. In simple terms, it means that if the 51% of the shareholders in the year in which the loss has been incurred have changed in the following years, then the carry forward of such loss is not allowed and the loss will lapse. So now let us see the summary of the provisions discussed by us. In the case of house property and unobserved depreciation, late filing of return does not affect the carry forward of loss. Race horses and speculative business losses are carried forward for 4 years and set off only against the same type of income. Long-term capital loss allowed to be set off only against long-term capital gains. Short-term against short-term and long-term. And non-speculative business income, business loss is set off against all heads of income except salary. So that is it for the video. Thank you so much for watching, and do please like, share and subscribe the video, and stay tuned for more such updates.